Good evening, everybody. So today is 24th of April 2019. I'm going to explain to you the webinar. So today's webinar, I'm going to look at SP500. We want to explain what SP500 is. We are going to look at it as an asset, when to buy it, when to sell it, and then we're also going to look at a brief history of how it came about. So from the dictionary, from just a little research I did online, SP500 is an American stock index that is based on market capitalization of around 500 companies. So the companies, the stock is listed on NYSE, NASDAQ, and CBOE-BZX exchange. Then this is how it came about. It's like the development. It is owned, then developed and maintained by SP Dow Jones indices, which is a joint venture. Then there are also brief history here. So the index actually was there since 1923, but then the document began in 1982. So in the year 1982, it closed at around 102 USD. Then there was an improvement in the year 2000. It was around 1,582.7. Then May 30th, 2007, SP500 closed at slightly lower than the previous reading. So it was like 20 USD below the previous high. Then the year 2009, March, it gained around 20%, which now made the all reading around 1,822.2. And then in July 2016, it closed slightly above 2,000. Then currently SP500 is around 2940.0477.36. So this is just a brief history of how this index has developed from 1923 until now. Proper documentation only began this year, around 1982, sorry. So we look at the main charts. We want to see how to understand what happened, and then how to ensure that we trade it correctly if we have to trade it. Then we're also going to look at the fundamental side of it. So we load that chart straight away. SP500 main chart. Here is SP500. Here. So I want to clean this chart. I didn't. This one has come by default based on the previous one which I had there. This delete everything. So what SP500 actually stands for is Standard Poor Index. You can check that. It's online. Let me read it. This is how it is online. So this is the chart. If you have to look at it on the daily basis, you can see that we actually rose from around 2910, and the price has been rising till currently we are here, and the price around 2933.68. Then you look at the same index of the previous 5 days. There was a slight decline. The price went down, and then it gained some value. So overall there was a gain in the past 5 days. And then the previous month, which is now this, from 2,800, so for the past 1 month there's been a gain, like from around 2798.36. SP500 was below. It has gained consecutively. We've seen it has increased with like 100 USD. So far it has been upwards. For the past month you're positive, the price is heading upwards. Then for the last 6 months there was a slight decrease at the beginning, then it gained value, and we're slightly above where we were like 6 months ago. Then we also look at the same index. yearly basis, there's a rise. So it rose like this, it went up, and then there was that decline before we eventually into the upper side. Then check it from the 5 years point. 5 years point of view, there's this. It was 2000 in the year 2014. It rose tremendously. We've been rising, and then there was a decline. This was late last year, and now we are recovering to the upper side. So far, if you are to evaluate this index from the highest time frame possible, that's the maximum time, that is from 1993, we've been upwards. The price has been heading upwards. You can see that here. It went up, and then there was a recession, and then it went up, and then it declined again, and it went up, and currently we are still up. So there was a massive decline which was there last year, late last year. The price actually dropped by, this is how much, from 2767.13 to 2531.94. So this is just an overview. This is not what we want to look at. This is to help understand the charts very well, and to understand that the index has been upwards. Therefore, the most important thing in this case is to look for upward positions. So back to our charts. This is how SP500 looks on a real chart. On the spot market, this is how it looks. This is how it looks. Let's start from the monthly. Just a second, I want to see a lot of history about the same. The account I'm using doesn't have enough history, so another one. SP500. We have it here. So these are a lot of data. So this is what you're going to explain what I want to say today. So on this one, the most important thing you need to see is how the price is declining compared to the way it's rising. Anytime the price rises massively, but then when it declines, there's just a small decline. Like from this point, we have this, there was a decline there, then the price continued up, there's a very small decline like that, and then continued up, and then there's also another very small decline, continued up, then there was this decline here, then it continued up, and then there's also this place where it declined, that is last year, but has currently headed up to the upper side. So since from 2008, this was the biggest decline. This is the second biggest one. So far the price has been upward. You see a move up, then there's a small retracement, it continues up, there's a small retracement, continues up, there's a small retracement, it continues up, and then there's a small retracement. So overall, we are heading to the upper side. Whatever you choose to trade on this index has to be a buy. Anything you want to trade on this index should be a buy. And if you confirm, like the previous webinar we had about the same index, I did mention that when price was here, you can remember I actually had a level at this point, a support. I called this a good support. There was also this as a very good support. So I took the entire place as a support. It was here. You've been following properly what I keep saying. Mention that this was a support here, a support, 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 support. Then price broke below it, and then it came back. So you can remember the main reason I was saying this was a buy and not a sell was that overall this index is upwards. So far there was no clear sign for a sell. Instead, there's only this uptrend that is controlling the entire market. So this place here we have This one was a false break. We had a false break here. False break, price came back up, traced back to the same place, and this is the best place to look for a buy from. So I did buy it there and we took a buy from this point. We expected the price to proceed up, which already it has done. The price has proceeded up and is still upward. So on this side, if you have to trade this index in the next few weeks maybe, then these are the levels you need to look for. Look for a break above this level. Wait for price to clearly ascend beyond this level. Expect price to break above clearly. Let price break above it clearly. For something like that, the price should continue up, then retrace back slightly, or we continue to the upper side. So this is one position we want to take on this one. There is no selling this one, despite the fact that we are at a resistance. We are not going to sell it, and that is based on the fact that overall this index has been upwards. There are only slight retracements. We have the first one, there's the second biggest one, and this is not the biggest. The second biggest is not the biggest. The biggest one is this one. So you compare this one, and the last one, you'll realize that there are chances you're still proceeding upwards. So the main reason I'm saying that you're still upwards is because the value of this index is actually not determined by one company. From the name, there's a group of like 500 companies with its value. So anytime there's an error or maybe there's a mistake somewhere, it's likely not going to decline a lot compared to the others, compared to the currencies. So we want this to happen. Want price to ascend above this level. This is the only thing we are waiting for, that the price should clearly break beyond this level, then it should break above, as we said, should continue up and retrace back slightly before we can pick a trade. So this is basically from price action. Let me add an indicator, 200 simple moving average. Somebody is asking how I came up with the 200. So the 200 I used the strategy testers to find the correct period. I didn't just come up with it out of nowhere. It was just I actually had to back test it. So to do that, this the strategy tester here. Actually ran it through the test, and then I realized that 200 was the best period. So, and you can confirm that by yourself, that anytime the price moves away from the 200, in this case, you see price going up. Anytime it traces back to the same moving average, it tends to continue to the upper side, something like this. So I actually came up with it from an array. I looked at like several numbers from 1 to 1000. Then I realized that 200 was the best period. So when you use 200, it actually relieves you of the stress of having to trade anywhere. So the price comes back like this, you look for a buy. Next one, when price tries coming back to the same place, you're supposed to still look for a trade. And in the future, should price get back to the same place, you're supposed to still look for a trade. So this is just one thing you need to see. This is a dynamic support. We have another dynamic support. Then there's a dynamic resistance, another dynamic support. So we add another indicator. What I'm trying to do is to just support the fact that this index is still upwards. Therefore, what we need to do is to look for a buy only. That's why I'm adding these two indicators. Also going to add others, but not. So the low one, which is this is MACD. Period I'm currently using is 12. Just a second. I'm using the period 12 for the fast EMA, and the slow EMA I'm using 26. Then MACD simple average I'm actually using 9. That's by default. These are the settings. So how it works is this. There are two things you need to read here. Actually, there are three. You have a line, which is this. Is this horizontal line, the one I'm having my pointer at. This one, and then there's also this red line. and then we have these blue lines. What this blue line means, they're actually called columns, and also called the bars of MACD. And then this is the signal moving average. And these columns can also be called the main MACD. Anytime you have price, like anytime you have the columns of MACD closing beyond 00, and this is the 00, we add a line to it, 00. So anytime you have the columns of MACD closing above 00, and then the signal moving average actually closes above 00, then that's a good chance that we are heading to the upper side. But anytime you have the columns of MACD closing below 00, and then the signal follows it and closes below 00, then that's a sign that we are heading downwards. So as you can see on this index, just look at it like this. We want to look at the decline, like the moment when these columns were closing below as retracement. These were actually retracements. This was a retracement, this was a retracement, then this was also a retracement. So compare the retracements with the main move. Anytime the price breaks below, like the columns of MACD begins to close below 00, the price does not remain there for long. It goes slightly and then pushes back up. It goes again slightly and then pushes again back up. You have the same thing. It's a very small retracement before it continues up, and then this is a very small retracement. This one stands for a retracement. Continues up slightly, then it's a small retracement before this. You see this move the upper side. So overall, from what we've seen from these two indicators, the moving average and then the MACD, this index is actively heading to the upper side. The best you should do is to wait for places where price tries to get back to this moving average, then you pick a buy. So assuming something like this happens, that the price, instead of heading upwards, it begins to retrace back to the lower side from where I'm supposed to buy from, I'll still not sell it. Irrespective of what happens, I'll still not sell it. This is a buy, and it's even better if price can break above, or if it can retrace back to this moving average, we look for a buy. So look at this as retracements. Only on this index you should be looking at these moves as retracements. I'll mark them as red. This is a retracement. Also have this as retracements. That's a retracement. And then this the second one, third one, sorry. It's a retracement. Third one as a retracement. This is the fourth one, sorry. And the fifth one, this is also a very good retracement. Then just recently the price tried retracing back to the lower side. This was last year, December. Price tried coming back below 00, then it broke above again. So as it is at the moment, this index is upwards. The best you should do, just look at it like this. Compare the retracements, which are this, and the main moves. There's a retracement, there's the main move. There's a retracement, then there's a bigger move. There are these two retracements, then there's a bigger move, and then there's a retracement, the one we saw last year. So we expect the current upward to proceed even higher. So the best you should do is not to buy as we speak, but wait for price to ascend above this level. Let price go below 2906 point. 2906 point. That's the second. 2906.8. Let price clearly go beyond it. Then it should trace back to the same point before we can pick a buy. So somebody's asking again how I came up with the period I'm using the moving average. As I've said before, I used the strategy tester. If you know how this works, the strategy tester works very well, and you should be able to understand what I'm saying. So basically, I just developed some like a simple indicator, and then I ran it through the tester, which is this. And see this, the slow, this that one. I ran it through this tester, and then I realized that 200 was the correct period. So it's against that background that I'm saying that 200 is the best. I didn't just come up with it. And if you realize that somebody is saying 200, someone just know that it's from backtesting. The correct way to come up with the correct period for any indicator is actually through backtesting. You cannot just guess it. You cannot guess it. I hope that answers you. I hope that gives you a good response. You can never guess the period of an indicator. If you can't find the correct period or you don't know the correct period, just use the default setting. Or if somebody has prepared an indicator for you, the one you're supposed to use, then just ask them for the correct period. The best way is to run them through the tester first of all. Run all your indicators, give them parameters. Like in this case, I can say I want to run this from 1, maybe 1 with a step of 1 to 200. So what this does is it will try testing all the periods from 1 to 200 and find the correct one for that particular also for that particular time frame. That is how I came up with the period. It was not based on guesswork. So the same thing applies. If you want to find the correct period for MACD, you could do the same thing. Just prepare a simple program for that and then run it through the tester. And ensure you feed all the information under this option. Ensure you feed them here, so that you're able to run it through the test, through the start and then step and then the last where it should show. We are going to add the next indicator, the third one. So I'll delete this to create space, the one I just added. Delete it. It's called average directional movement index. So how to add that average directional movement index? This is how you can add it to your screen. This insert, you go to insert option, indicators, and then there's trend indicator. This is how you add it. So when you are here, the very first option you're seeing is average directional movement index. From the name trend, it's a trend indicator. It shows you the overall trend. Click it. Then these and there are no parameters. It comes by default. There's no parameter for it, but you can add levels. Sorry, this accumulation distribution, we don't need this. Average directional, this one. This point. So this can happen sometimes. You may be adding an indicator and then you realize it's the exact of that's being added. You need to, if you can't add it from this option, then you need to come back to this one. Try adding it from this button, the one this and this plus and this green plus sign. Trend, then we add it. It's now okay. So the period also by default on this one is 14. Basically what 14 means is they calculate the average of the past 14 candle close, the average of close for the past 14. That's what that means. That's it. So how this works is this. As I've said, the main reason I'm adding this indicator is to support my position that this index is still upward. That's why I'm still adding the third one. It has 3 lines. There's the main line, which is this. We have this complete line. The work of this one is to show that there's a trend, but it does not indicate which trend is active. So we have this one, the main line, which is this, the one that is supposed to show trend, actually works along the level 25. This level is not always there by default. You have to add it by yourself. You need to come to levels, then you add it. Then you need to, that is simply how you add it. This complete line does not work alone. It has to be put together with the line, the horizontal line. Anytime the complete line is above 25, it means there's a trend, but it does not show which trend is active. So what shows trend are the remaining 2 lines, the green one and then the red one. Anytime we have the complete line above 25, then the green one is above the red one. Whether the last two are below 25 or above 25, what that means is the overall trend is upwards. So if you compare this indicator with the one I'm having, ADX, and the one I just deleted from the screen, all of them are showing the same thing. As we speak now, the overall trend is upwards. SP500 is still actively upwards. The best you should be doing is basically to wait for trades, buying trades. If you are looking at this at the moment and you want to find the correct place to trade from, you should just be waiting for either a break above 906.0 or price needs to retrace back to this level. Let price try coming back after this red thick line. Then we're going to look for a buy from that point. So this buy is supported not only by the fact that the price action is giving us a buy, but the two indicators you're having, this and this one, and the one I just deleted, all of them are showing the same thing. The current active trend is upward. So we expect SP500 to gain value. We expect it to still gain. This group of companies should continue gaining at least for some times. And as long as the price does not break below this indicator, this should be a dynamic support. It was before a dynamic support, dynamic support, and even in the future, we expect it to be a dynamic support. So that should push price even higher. That should push price even higher. So I want to mention something here, that as much as we are focusing so much on SP500, it tends to move the same way with other indices. So if you want to trade SP500, like we see in this case that SP500 is giving us a good trade for a good position for buying, look for similar trades on indices that move the same way. This I'll just look at maybe two. Yes, this is what I call correlation. Somebody has this is what is called correlation. So all of them tends to move just the same way. Correlation is when you have two assets moving in the same direction. So just look at this chart the way I was looking at SP500. You can see, other than this retracement here, the next biggest retracement we are seeing actually happened last year. This one. And currently, as we speak, the price has actually gone beyond the highest high we've seen so far. The price is above the highest place it has reached. It's above this level. So this is basically a breakout. If the current month's candle can close beyond this level, it's still upwards. It's still actively upwards. Therefore, whoever wants to buy SP500 should also be looking for a buy on NQ1, Nasdaq 100. So if you want to trade this correctly, you want to trade SP500, don't just focus solely on this one. You can also want to buy this one. You also want to buy NQ100. And this, and also let me add the three indicators, the ones I had before. You have to see the same principle applies to all of them. I'll start by first adding a moving average, 200 simple moving average. It's applied to the close of the price. It's not being added like that. I add the next one, which is MACD. So basically what I wanted to do is to try and compare retracements that are seen on MACD, the main moves. Main moves are moves that are in line with the overall trend. So anytime you have columns of MACD closing below zero, that's a retracement, especially on these two, NQ100 and SP500. The same thing may not apply to currencies. So we have the first retracement. We have this as the first retracement, the very initial one. This was the first retracement, the one we saw before. Support. This was a retracement, sorry. Then there was a retracement there. I'll mark them red so we are able to distinguish them from this. They are like this. Then this one should be red. We also have this as red, the next retracement. next retracement, sorry, this, so have this, so this one is a retracement, this is a retracement. So as you can see, just the same way we are looking at MACD at SP500, the same thing looks almost the same way with NQ100. The same way there are small retracements, the same way we have very small retracements on NQ100. What this means is, like now as we speak, this is a surge to the upper side. We are actively heading to the upper side. On SP500 also, there's the same thing. We are actively heading upwards. I'll add that indicator once more. This post present retracement. Compare that to the main move. This is almost insignificant. So have this as a retracement. So have this as a retracement. So now that the price is above 0, all the columns of MACD are above 0.00, we are heading to the upper side. The best you should be doing now is actually to look for places to buy. And as I've mentioned, best places to buy are the key levels we are having on the chart. The key levels is this. If price should break above, that's a buy. And if price should bounce off from this level and head to the lower side, then I don't recommend sell. You should wait for price to get this trend line. This should act as a dynamic support. Then you pick a buy from that point, expecting price to continue and go beyond this level. So somebody's asking me how comes I'm not going to sell it. Why should I? That's what I've just mentioned, that the overall trend is upwards. The key to success in trading indices is remaining with the overall trend. If you notice that something has been upward for the past 20 years, there are extremely high chances you are still heading to the same direction. So instead of selling against, you should buy in line with the trend. That's the most important thing. Don't sell anything. It may look good, it may have all the signs, but don't sell it. Wait for price to either break above it, or it should bounce off of this trend line, where you should pick a buy immediately, expecting that to push price even higher. So as I've mentioned, the idea of correlation applies also to these indices. SP500 and NQ100 and Jones, all of them tend to move the same way. So I have this. So this one you can confirm on your own. Just the trend actively upwards. Okay, so I have Jones. Just the same way. Then as you can see, all of them are actually around a clear resistance. We also have this as a resistance. So if you have to trade this one looks like a sell. Somebody could argue that this is a resistance, then the price went down, a resistance, then we are now at a sell place. But whoever says like that does not take into account that the overall trend is upwards. We are supposed to look for a sell instead. Sorry, we are supposed to look for a buy instead. Let price clearly rise beyond this level. We want price to go above, then retrace back slightly, same place, you can pick a buy. And even if I was to add the three indicators, the ones I had on SP500, see that all of them are just showing the same thing. This is what marks the retracement. That's the retracement. Withdrawal is the retracement. The same thing we are seeing. Just a second. The same thing is true for NQ100, and the same thing is true for SP500. If you want to trade this correctly, SP500 correctly, then just ensure that whatever you choose to trade, whether it's a sell or a buy, is in line with what you are seeing as a trade on this one and also this one. So we've only looked at three, but there are others. You need to find that by yourself. There are also others. There are other indices that move just the same way. Like this one also tends to move the same way. We also have Australian index that also moves just the same way. See, this is a resistance. We are currently at that resistance. Australian index also the same way at a resistance. So If price should close above on all this, first one, the second one, the third one, the fourth one, all these 5 indices, then that's a sign that we are proceeding to the upper side. Anytime you choose to buy this one, ensure that the same buy is on NQ100, the same buy is on Dow Jones, the same buy is on France stock index, and then the same buy should be available on Australian index. So I hope that should bring us to the end. Or somebody's asking me whether they should buy immediately. I'm not saying you buy immediately. Wait for price to, it has to break beyond. If you want to trade this correctly, whatever is happening now, anything is possible. This is a resistance. We are yet to break above it. We want price to clearly break and close above. We want to see a green candle closing above this level. That's when we've confirmed that the trend is upward. So at the moment, with the way it is, this is not a buy. The trend is upwards. Everything is showing us upwards, including the indicators, but there's no clear sign for buying. So we don't recommend looking for a buy. Don't look for a buy now. Wait for price to ascend above the zone, then retrace back before you pick a buy. The same thing applies to NQ100. Look for the same thing, a break above, a retracement. The same thing, a break above, a retracement. Then the same thing should apply to France stocks index. The same thing should apply to Australian stocks index. So look for a buy on this and don't find yourself selling SP500, especially now. We've seen from the past that anytime there's a small retracement, price tends upper side longest. Anytime there's a small retracement, it tends to upper side. So just recently we retraced. Expect this upward to remain for some time. We expect price to proceed upwards for maybe up to the end of this year. The best you should do is to look for buy positions. If you are on the spot market, you can still buy it, wait for price to ascend clearly above, then retrace back before you this buy. Another thing, you can wait for price to retrace back, pick a buy, expecting that buy to push price even higher. So that should bring us to the end of this lesson. Let's meet again tomorrow at 11.